Hey guys, what's going on? Jeb here, and in today's video, I am going to be showing you exactly why Bitcoin is about to go into a massive bull market. You may have noticed over the last couple of weeks that Bitcoin has finally broken out of its stagnation and is rallying to new highs. Well, I did too. So in this video, we are going to be discussing the strength of the United States dollar, or lack thereof, the technicals and fundamentals surrounding Bitcoin, and what all of this means in relation to whether or not Bitcoin is about to return back to all-time high very, very soon. You're going to be walking away from today's video with a solid foundational understanding of the technicals and the fundamentals that indicate that Bitcoin is about to return back to all-time high in the coming months. So if you guys do enjoy today's video, consider hitting that like and subscribe button. Make sure you leave a comment down below and tell us what you thought. But without much further ado, guys, let's go ahead and dive right on into it. This video is sponsored by Bybit, one of the largest, most trusted names in the cryptocurrency space. It's the exchange I personally do all of my trading on, and there's a good reason for that. Bybit's user interface is highly capable and very user-friendly, and if you have any questions, they do have 24/7 customer support. It's one of the largest exchanges for a reason, and it is the exchange that I use, so be sure to get signed up today with the link in the description down below. All right, let's get started. I want to hit you with a statistic coming from a very well-respected economic analyst. The estimated indirect cost of the COVID-19 pandemic, according to economists Lawrence Summers and David Cutler, is nearly $16 trillion worldwide, representing 90% of the United States gross domestic product. The U.S. dollar is already undergoing significant economic inflation this year as a result of quantitative easing implemented by the Fed through the CARES Act. You guys have probably heard about the statistic that 22% of all U.S. dollars in existence today have been minted this year. Contrast that with the absolute maximum increase in gold stock over the last 70 years at 2.5%, absolute maximum annually, and you see the problem here. This mass money printing in response to the COVID-19 pandemic was done by the federal government to save the economy, and that does make sense, and I'm not necessarily faulting them for that. However, we do have to understand the economic implications of that. We're going to be getting to the problem of inflation on the US dollar in even more detail later on in this video and in a video coming up on Wednesday, so make sure you subscribe and hit the post notification bell for that. We'll be getting back into that before the end of the video, but before we do, I first want to jump into some notable technical and fundamental indicators on the Bitcoin chart. As we get into it, we'll be looking at some market trends that indicate that Bitcoin may be going back to all-time highs sooner than you first thought, and the first one that we need to talk about is the crossing of the 20 WEMA, or as I like to call it, the WEMA, above the 50 weekly exponential moving average. Historically speaking, the last 3 times that we've seen this event happen on the Bitcoin chart, we have always seen a major rally to follow on Bitcoin. So long as Bitcoin held support above the 20 WEMA, we were able to maintain that bull market, maintain that bullishness, and continue trending north. Well, guys, that's exactly what we're seeing happen right now. Bitcoin has had that 20 weekly EMA cross above that 50 weekly EMA, and Bitcoin is maintaining above the 20 weekly EMA in exactly the fashion that it needs to build and maintain a bull market. Remember, guys, both the $20,000 all-time high that happened at the end of 2017 and the recent high around $13,700 both followed one of those major crosses on top of Bitcoin staying above the 20 weekly EMA. So keep an eye on that. It's a very important foundational concept that's going to build the case for Bitcoin moving into a new future bull market. Another great indicator that's showing bullish promise on Bitcoin is the weekly chart MACD. If you guys take a look at it, you can see that weekly chart MACD is currently far above the zero level on the histogram and looks poised to have a bullish cross. The weekly chart MACD up until just a little over a week and a half ago was actually quite bearish. In fact, we saw a bearish cross on MACD not that long ago, but now Bitcoin looks poised to have that MACD cross and allow us to go higher. So guys, so far we have a bullish golden cross on the weekly chart, not between the 50 and the 200, but between the 20 and the 50, two very important moving averages that I don't see many people talking about. And on top of that, unlike many of the other periods in recent memory on Bitcoin, weekly chart RSI is not overextended. It's still sitting below 70 right now. When we've seen Bitcoin go into bull markets before, normally it is seeing Bitcoin's RSI significantly higher. We started the bull market much, much farther north than we are right now. That room to run on the RSI is going to be pivotal in the coming bull market that I think is coming. So let me give you my final technical / fundamental, not news related reason for why I think, and I'm frankly pretty sure, a Bitcoin bull market is coming. And of course, guys, you already know what it is. It's the halving. Like I said, a video is coming out on Wednesday about stock to flow, and we're going to be going into detail on that, so make sure you subscribe for that, but I'll give you a brief rundown. The reason the Bitcoin halving is so very important is because stock to flow is a very important predictor of the hardness and the salability of a currency. The higher the stock to flow ratio is on a currency, the harder it is. That means it's harder to produce that currency. It's not a soft currency, it's a hard currency. As Bitcoin's stock to flow ratio goes up as a result of halvings, it increases that intrinsic trait of Bitcoin's bullishness, its stock-to-flow ratio, which currently is still lower than gold, but is about to climb much higher. Looking back on the chart, you guys can see that whenever Bitcoin has gone into a bull market previously, it has first gone through a halving event. The 2013 bull market happened immediately after the 2012 halving, and the 2016-17 bull market happened immediately after the 2016 halving. Historically, we have seen bull markets form like this. A halving event takes place. Bitcoin trades sideways for a little while, and then as that halving stock-to-flow increase catches up with Bitcoin, Bitcoin goes on a bull market. So if Bitcoin is to repeat what we've already seen happen in history, we should be expecting a major bull market on Bitcoin in the next 6 to 12 months. I personally believe it's undervalued, and I personally believe there are good reasons to believe that. I would hope so. It is my opinion after all. Anyway, the point I'm making is that there's not a lot of bearish arguments on Bitcoin, and in fact, I do think there are a lot of bullish ones. Another one that I wanted to touch on was whale activity on Bitcoin. Before we get back to the United States dollar, its inflation, and what that means for Bitcoin, I first want to touch on said whale activity, because as we've talked about before, we've mentioned how Jack Dorsey is investing in Bitcoin, how a lot of big names, MicroStrategy and Square being two of them, are investing in cryptocurrency. We should take these companies' knowledge and wisdom into account when we are doing our analysis on the market and our future predictions for that market. These companies obviously know what they're doing. They're not throwing around $400 million because they were stupid getting there. They acquired that much wealth because they know about business, finance, economics, etc. And the same, generally, I would think would be true as well for the whales. I can't pull a statistic out of thin air to back this up, but I doubt most of those whales got there by accident. I doubt most of those whales are horribly unprofitable. I would imagine that if they got there in the first place, they got there for a reason. With that in mind, we recently saw some big news coming out of an asset management company called Stone Ridge, who recently confirmed the purchase of over $115 million worth of Bitcoin. And as I mentioned earlier, they're not the only ones in that camp. Square, an American financial service provider, just invested 1% of total assets, not cash on hand. I made that mistake in a previous video. Apologies for that. Square just invested 1% of total assets into Bitcoin, equating to $50 million worth of Bitcoin. 4,709 Bitcoin were purchased. On top of that, we've also seen the CEO of MicroStrategy, Michael Saylor, write off on a $425 million investment in Bitcoin. This is not the little leagues anymore, guys. Like I said, I've told you so many times, I remember when I got into the space, and these news stories were unfathomable. This didn't happen back then. A lot has changed in 3 years, and it's a perspective issue if you don't see that. Each one of these companies, each one of these names have only positive things to say about Bitcoin. And of course, we can't rely 100% on their testimony because people are fallible. They could be wrong. But I think we do have good reason to believe, based on their expertise, that there's at least a strong argument to be made in what they're saying. And I'll tell you what they're saying. Based on the fact that they're investing hundreds of millions of dollars, collectively billions of dollars in Bitcoin, something we're going to get to more in a future video as well, how whales and institutions are buying lots of Bitcoin. They are saying through their actions that they have confidence in Bitcoin long-term, not short-term. We're not talking short-term technical analysis in this video. We're talking long-term TA. The long-term TA, the long-term FA, the long-term analysis in general looks very healthy, and this only backs it up. So with that said, I want to wrap up this video with what I believe to be the most important factor that is going to be good for Bitcoin in the long term. And by long term in this case, I'm not even talking 6 to 12 months. I'm talking decades, but especially the next couple of years. We talked about the inflation of the United States dollar earlier on in the video, and I want to get back to that with an article with some expert analysis from members of Goldman Sachs. They claim the United States dollar will continue to drop in value, keyword continue, because it's already dropped in value. This article shows that the United States dollar has dropped 7% in value since its highs back in March, before the CARES Act and before the coronavirus and before a lot of the quantitative easing that we've seen has come into effect. They also estimate that the US dollar will continue to lose up to 15% of its value because of everything that has happened this year. If this occurs, it'll likely increase overall global trade, as the United States dollar is the world reserve currency, and as a result, it's going to cause an increase in local currency valuations, because what they're pegged to, the United States dollar, the world reserve currency, is losing its value. This will result in a drop in local currency cost to import, increasing non-US based trades, which is a bad thing for the United States dollar. It's bad for the United States itself, and it's good for Bitcoin. Let me explain why. The inflation of the United States dollar may have a short-term bullish, if you want to call it that, side effect on local currencies because of what they are based on losing its value. But it's actually a pretty bad thing, because anything that happens to the United States dollar is going to have knock-on effects on the rest of the world currencies, as they are all based on the United States dollar. 10% inflation in the US dollar might mean 100% inflation in less stable currencies that are more manipulated by authoritarian governments. We've seen that happen with the Bolivar. We've seen that happen in Zimbabwe. We saw that happen post-World War I in Germany, as countries printed more and more and more and more money to fund the largest war that had ever happened in the history history of mankind at the time. These currency crises are what led to the downfall of the German currency in 1918 and 1919. The way our traditional finance system works today assumes that inflation is perfectly fine, but it's not. It's dangerous, and there's a reason that Bitcoin was created. Being decentralized is a very important component of Bitcoin, but also keep in mind, one of the most important things about Bitcoin is the hard cap on how many could ever be created. At the crux of the issue behind all of Bitcoin adoption is that the United States dollar, the most powerful currency in the history of mankind, does not have a cap. It can be printed into oblivion, which means it is vulnerable. And if the United States dollar is vulnerable, it means anyone who stores their wealth in the United States dollar is vulnerable to losing that wealth to the companies, the corporations, and the governments who understand how currencies work and will facilitate a wealth transfer from those US dollar holders to their pockets. That is where Bitcoin comes in. Bitcoin cannot be hyperinflated, therefore that Achilles heel does not exist in Bitcoin. As much as I love Ethereum and I do invest in Ethereum, it's why Ethereum's number 2 and not number 1. Ethereum doesn't have a hard cap. Bitcoin does. So when you're thinking about whether or not Bitcoin is going to go into a bull market, when you're thinking about does Bitcoin really have a case to go to $20,000? Does Bitcoin really have a case to go to $100,000? When you're thinking about whether or not that makes sense, keep in mind, Bitcoin does not have the same vulnerability that the United States dollar does. It's not centralized, and it's non-inflationary. Those two things are revolutionary, and it will result in long-term bullishness on Bitcoin, which means long-term bullishness in your account. There's a paradigm shift going on in economics right now, specifically in the world of currency, and you guys don't want to miss that boat. With all that said, guys, we are going to be wrapping out today's video. Before I go, though, I do want to mention the Cryptocurrency Technical Analysis Academy because it is what makes this channel possible. Guys, in CT2A, we teach you the foundations of technical analysis that make you a better trader and teach you how to actually read the market. Everything I just discussed in this video is based on concepts that are taught in the academy, and it's very important that you have a nuanced understanding of how to read and analyze these markets, because if you don't, quite frankly, it's going to be very difficult to profit in them. If you guys are interested in learning more about how to become an effective and profitable trader, I encourage you to check out the Cryptocurrency Technical Analysis Academy linked in the description down below. But anyway, guys, that is going to wrap it out for today's video. Be sure to like and subscribe and hit that post notification bell so that you'll be updated every time a new video goes out. And leave a comment in the comment section down below telling me what you think about the inflation of the United States dollar. What do you think about the future of the United States dollar? And what do you think it will do to Bitcoin and its price action? Anyway, guys, that's going to wrap it out for today's video. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.